This is your investment update for May of 2017. Good month for equities. Domestic equities were up 1.4%. Global equities were up 2.2%. And a good month for bonds again as well. Domestic bonds were up 80 basis points and international bonds were up over 1%. And we're entering kind of a weird period for the market. Generally in the summer, volatility dies in the markets. And we also have a weird period right now where you have kind of a lot of bad news in the news cycle, both geopolitically. We've had some terrorist attacks overseas, and we've kind of had some domestic economic data with last week's jobs report that wasn't great. Yet no matter how bad the market or how bad the news gets, the market doesn't seem to care and shrugs it off and kind of goes up every day, or so it seems. It's important during these times to remember that you always have to keep risk management in place and don't let the market kind of lull you to sleep. Generally, periods of dead volatility and kind of euphoric behavior like that are followed by periods of volatility, and you'll want that risk management in place. So that's what we continue to look at. Areas of concern in the market, we don't like to involve politics, but certainly we would view the current geopolitical climate as a powder keg. Who knows what's going to happen there? Maybe nothing, but just in general, looking at it through an investment lens, that is something that concerns us because one statement here or one move here could really cause some risk-off behavior in the market. So we continue to watch that, and also China. Not to beat a dead horse, we mention that every month, but there's some news. China's moving to deleverage their banking system, and they've done something where they're kind of putting curbs on these negotiable certificates of deposit that their banks use to provide liquidity. And what that's doing is really shrinking liquidity in the banking system, and it's causing Chinese companies to go to a shadow banking system to get lending. What that does is it's kind of unregulated and it hides true risk there in what is already kind of an over-leveraged and potentially dangerous banking system. So we continue to watch that. Everything's kind of smooth sailing there for now, but that could be something that at any moment could cause some problems in the market, but also cause some opportunities on the back end of it.